I'm Teresa Castle, and I am here with Tarek Morshed with the Morshed Group from Sotheby's Residential Real Estate here in Austin, Texas. And today we are lucky enough to be able to get some good information from him about where the market is today, where it's been in Q3 of this year of 2021, where it's headed, some changes that happened, and especially how that impacts residential buyers, sellers, and even homeowners. So Tarek, tell us a little bit about what did happen in this last quarter. Did prices rise or fall? What changes were there? And more importantly, what was the impact of that?
So I would say that there's been four main things to talk about in Q3 and what happened around prices. Number one, the market frothiness finally subsided. And as you can see in this chart, the average sales price and the median sales price did move up a ton in Q3 in all these months around July, August, and September, moved up about 2%. Whereas in Q2 and all the way back into 2020, you were seeing 5 to 6% each quarter. So that's a pretty big thing that happened. Number two, supply ended at about 1 month supply, 1.11 month supply. And what that basically means is there's about 4,000 homes on the market, okay? At a 6 month supply, which is considered a balance point, there would be 18,000 homes. So it's still very undersupplied, but it moved up just a bit so that buyers actually saw some more choice in inventory in the market, which meant that buyers didn't have to go crazy on multiple offers, and you didn't see 20% over list price happening in Q3 as much. The high end and the entry level price bands were still the most in demand price bands and where there was the most competition still in Q3. And to bring it all together, we saw prices rise about 3% across the whole market in Q3. To give some real world examples here, this home that we're showing you right now was a listing we had in Terrytown, and it was listed around 2.375 million. And Terrytown, for those who don't know about the neighborhood, it's a central Austin neighborhood, very in demand and sought after, and prices usually range from $1 million up to about $8 million. In Q2, this home that we're showing here would have sold in day one or day two, maybe 10 to 15 offers and 20% over list price, whereas this home took us about 3 weeks to sell. And we still got an amazing price on it. It was a very strong offer, but we didn't get multiple offers. And so you're seeing a real world example of some of the points I've just made about Q3. And this is what we would call a tier one home, where it's that wow home, completely move-in ready, the kind of home you would see on all the real estate shows. So you can kind of see how things change in Q3 around the tier one homes. And then here's another example. This home, we were representing a buyer. This was in a neighborhood called Allendale. It's kind of north central, just outside the city in terms of a central neighborhood. And prices usually range in that neighborhood between 500 to $1 million. And this is what I would call a tier two home, where great neighborhood, great area, no major flaws, but hey, it needed some vision and some cosmetic updates. So this home in Q2 or before would have lasted maybe a week on the market at most, and probably still 3 to 5 offers and going 5 to 10% over list. This particular home was listed right around $800,000. However, this has now been on the market for 45 days, no offers, and they've actually gone through some price drops.
So then, Tarek, where is the market now? And also, very importantly, where is it going?
So, Q4 and where we think it's going, let's start with where it's at currently right now. Number one, for the first time in about 2 years, we're actually having a normal fall market in the market where the season, typically fall in real estate, tends to slow down a little bit during Thanksgiving and Christmas and so on. And so we're actually seeing some of that where buyers aren't having to still rush out and make offers on Christmas Day, because of what I was just explaining and what happened in Q3, right? So that's something that we're just really seeing that's different right now in its cadence. All that being said, even at 1.1 month supply, that's only 4,100 homes or 3,500 homes on the market, whereas a balanced market, we would see 18,000 homes. So it's still busy enough that it's pretty active in the market, but it's just not bonkers. And we expect that to kind of really carry through Q4. Okay. We're going to see, in my opinion, about another 3% in price rises through this quarter. And ultimately, where I think we end up landing is, about 20% for the whole year, including that 3% in this quarter. But this quarter and even last quarter were a little bit lower appreciation than the quarters before because, again, the market's just stabilizing. What I expect to still see in Q4 also is the high-end wow homes above 2 million are still going to be extremely competitive. And then same thing with below 500,000. So as you guys can see on this map, we've put together a little bit of where all the hot zones are currently. And if you look at this map, you can see where the central parts and Westlake, which are typically your higher level price bands of 800 and a million and above, are still extremely hot. And then you can kind of see then the other layer is on these suburb markets, right, where you might see pricing closer to that 500,000, a little bit lower, just a touch higher. And you're seeing these tertiary submarkets on this map being very hot zones still. So we expect that to continue through this quarter. And, also looking ahead, I think we're going to see about 7 to 9% appreciation next year. So if our median prices currently right now are about 450, our average sales prices are 540, you can kind of extrapolate that to about 7 to 9% above that for next year. And I think that's where it's going.
So what does all that mean for sellers in today's market?
What we're telling our sellers currently is we're absolutely at the peak of making the most you can if you're considering selling your home. And we're almost past that peak. So we're advising our sellers to get on, or any seller or anyone considering selling, get on the market this quarter, even though it's late in the year and it's the seasonal kind of, slower market, because the inventory is still pretty low, or in Q1. That's going to be your best shot looking out a year to make the most money if you are selling. Okay. Also, it's time to really price realistically. You can no longer price 100,000 above list or above market value. That is gone. And we're seeing a lot of sellers making the mistake right now, trying to still be that aggressive. And even though they might be a tier 1 home, that's just that wow home, they're sitting 45, 60 days in those cases. Average time on the market today is about 50 days, which is still a pretty low number, and it constitutes all kinds of condition of property. But the real nice tier 1s are still selling pretty quick, but the ones that aren't priced right are sitting. And the age-old thing is the longer you sit on the market, the less you're going to make, right? So it's time to price realistically and not overreach. And so those would be probably the two main points. And I would just, again, strongly recommend getting on the market sooner than later.
And so, Tarek, tell us what this means now for buyers who are ready to buy their dream home.
Right. So buyers have had so much exhaustion in the market, and many buyers have stepped out of the market in the last year and a half. I think for buyers, this is your time finally. I would not wait, even though the market is cooling just a bit and stabilizing, because there's still only about 4,000 homes on the market, right? And so there's still enough competition that you shouldn't wait. because it's going to get busier in spring. At the same time, because it's not so frothy, I think there's a really nice window of opportunity over the next year to buy this quarter or in Q1 to probably get your best pricing and value over the next 15 months in this market. Okay. And next year, you're going to see, like I said, 7 to 9% appreciation still. So as a buyer, you should really still go do something now. Also, interest rates are expected to finally start moving up, maybe at the end of Q1, Q2. So I think that's also impactful in buying sooner than later and kind of tying into the market. Also for buyers, you're going to still see a lot of competition in the higher end and in the entry-level price band. So if you're in those categories, you really still want to stay aggressive in the marketplace because those will be still pretty competitive. I think 2023 or so is when our market finally cools and plateaus, but even then I don't expect a big pullback in values. And then we're going to have another run up very shortly thereafter. So the long run still looks very healthy. And so this is a good time to mobilize because at the same time, whether you're an investor or a regular buyer, you're not having to pay 20% over list like you did just 3 to 4 months ago. At the same time, it's not like the market's going to drop off. So you're in the best of all worlds in that position. I think what I would at the same time say is if you are a homeowner and you're not thinking about buying or selling, that, again, the good news is even with the market stabilizing a bit, you're still going to appreciate this quarter. You're still going to see 7 to 9% next year. So there's really nice runway. At the same time, because the market's stabilizing, if you are thinking about doing home improvements, or you are thinking about getting a home equity loan to do improvements or other things, this is your time because appraisals are going to be at their peak now, so you can really borrow the most. And given where rates are and rates are expected to rise in the end of Q1 or towards Q2 in next year, this is really a very strategic time to pull out some money if you're thinking about that and leverage the amazing appreciation you've had in your home, but probably still keep a great low payment because things have moved up so much. Thank you. Thank you. As always, I and our team love to bring this kind of value to folks that are either listening or watching and just really educate folks out there. Uh, you know, Please reach out to us with any questions you guys may have, whether it's a strategic question or just more information about the market, all the way to just needing help in your residential real estate needs. Also, you can get tons more information and updates ongoingly week to week, visiting our website and social media handles. And as always, thank you for the opportunity, and we will look forward to joining everyone during the Q4 market update.